everyone. Welcome to another episode of In Conversation by Advisor Coach. Today, once again, our guest in conversation is Mr. Mohit Bhatia, Chief Executive Officer of Bank of India Mutual Fund. Welcome, Mohit, to In Conversation.
Thank you, Suren. Thanks for inviting me here for
Our
this
pleasure.
conversation. Yeah.
Always. So, Mohit, let's straight get into the new fund offer, which you have launched on the 9th of August and is closing on 23rd of August, which is the Bank of India Business Cycle Fund. Now, could you explain our viewers the concept, the investment strategy about this fund? Is it, market cap and sector agnostic? Is it a bull market fund? We would like to know a lot about it through you.
Yeah. So thanks, Suren. Yeah. So as the name implies, the Bank of India Business Cycle Fund, the NFO for which has started on the 9th of August and closes on 23rd August 2024. So this is, a fund which is going to be allocating dynamically to equities across sectors and companies based on the business cycle concept. So, I'll just take a minute to really delve into what a business cycle is. And how we are constructing our portfolios based on this concept. So, we are all aware that economies, sectors, companies typically go through, cycles of expansion and contraction. And economic activity, therefore, is, a wave-like pattern which goes through these four phases of expansion, consolidation, contraction, and bottoming out. And we see that in the phase where you see expansion happening in the economy or the sector or the businesses. This is a phase where you see rising profits, rising growth numbers and profitability numbers, which are attractive for shareholders to be invested in. And then, the expansionary phase turns into more of consolidation, where growth becomes more stable, and followed by a phase of development in the economy or in the businesses where they may tend to slow down and start to contract, thereby leading to the fourth phase, which is a trough or bottoming out. And as we know that this is a cycle, this is followed over a period of time by the expansionary phase again coming in, right? Um, it is also important to note that there are broader developments or changes in the economy, both local and global, in our so what we call as macro factors or emerging trends, which are basically unraveling new growth themes as well as causing disruptions. So these are basically helping some businesses, these growth themes, and there are other developments around these macro factors which are leading to disruptions in the way businesses are being done. And it's important to keep in mind that the growth themes and disruptions are impacting business cycles across sectors and companies to a varying extent and degree. Now, this is where I think the concept of investing around the business cycle concept kind of comes in, in terms of how you could look at these developments and growth themes and disruptions and build up your portfolios accordingly. So, if you look at from an investment perspective, all equity investors would like to be in sectors and companies that are in the expansionary phase, or are likely to enter the expansionary phase. And this, expansionary phase is there for a prolonged period of time. And we mentioned that this is a time where your profit numbers, your growth numbers are the highest, and ideally, shareholder wealth is getting created during the expansionary phase, and investors would uh, in the same way like to exit at the time where growth numbers and profitability and all are slowing down. So investors using the business cycle concept would seek a relatively more focused and dynamic allocation versus, say, a flexi cap fund, right? Because, and this is towards new as well as existing businesses and sectors. So what investors in a business cycle fund would be doing would be to likely rotate or shift their investments towards companies and sectors whose share in the profit pool is estimated to increase, and similarly exit those sectors and companies where the whose profit share in the aggregate corporate profit pool is going to decrease. So with the portfolio across, which is invested now across a focus set of sectors and growth themes, the business cycle fund would therefore be not restricted in its investment mandate like a single sector fund. So I would place it, this is a thematic fund, I would place it somewhere between a single sector fund and a flexi cap fund. And I mentioned how this is different from a flexi cap fund, which tends to be more diversified in terms of themes and sectors and stocks that it would hold. And the business cycle fund would therefore be focusing on a set of growth themes and a set of sectors which are likely to be moving towards a higher share of the profit aggregate profit pool, corporate profit pool, right? So, so that's about the concept of the business cycle fund. And you also asked me about how we are going to be managing the
Correct. Is it
Bank of India business cycle fund.
sector
So,
market cap agnostic?
yeah,
Correct.
so I mentioned to you that there are these broader developments in our economic environment, both locally, globally, and which we will term as macro factors and mega trends, so which are leading to the creation of powerful growth themes as well as disruption of uh, certain existing themes that have been there for a while. Now, what we intend to do is to keep a close watch on the macro factors and emerging trends in the economy. And our investment team will endeavor to identify, focus set of growth
Hmm.
themes which we think are likely to influence creation of large profit pools across existing and new businesses.
Sure.
So essentially, the portfolio construct is going to be a top-down approach,
Mhm.
and our team is going to use these growth themes as a funnel to dynamically allocate across sectors and companies that, in our assessment, are likely to be positively and significantly impacted by these growth themes. So, and then similarly, on a periodic review of these evolving and emerging trends, we would like to, obviously analyze on a periodic basis the impact or a continuous basis the impact on business cycles across sectors and businesses, which will help us in staying focused on the significant growth themes, and also at the same time review businesses to exit where we feel either a theme is not really playing out well or is not really resulting in creation of profit pools, or there is a slowing down happening over the medium to long term. Now, it is important to note, because you also said that this is not just a bull market fund. It is
Yeah.
also that these sector rotations and allocation changes are related to sectors and companies, which would be based on strategic and structural developments with a medium to long term perspective rather than being short term oriented or tactical allocation
Sure.
change.
Sure.
So like we said, these growth themes we believe are uh, themes which are going to play out over the next 3 to 10 years. And if there is an impairment in the investment thesis or certain themes which we feel during our periodic check are not playing out, those will be the sectors we may be exiting. And again, the scheme is going to be market cap agnostic, and which means that it's not limited to the investment universe is not limited to being in any one specific sector, and is also market cap agnostic, which means we can invest across
Mhm.
large cap, mid cap, and small cap companies.
Sure,
Yeah.
sure. No, thanks very much for that, Mohit. So it's essentially a diversified equity fund, which will, of course, utilize these business cycles to maximize the returns in the portfolio, and hence it's quite a dynamic, investment concept strategy in a client's portfolio.
Yeah. 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 So
Sure,
yeah. Yes.
sure, sure. So why should investors and distributors, look at this fund, Mohit?
Sure. So, like I said, this is essentially uh, a product or an investment construct which is based on what we feel are going to be the most relevant growth themes or significant growth themes leading to higher share of the profit pool in the aggregate corporate profit pool.
Sure.
So hence it's going to be is meant for investors with like aggressive risk profile,
Hmm.
investors who are looking to not be limited to one sector, investors who are looking at more concentrated set of sectors or themes vis-a-vis, say, a flexi cap fund. So, to me, that's the kind of investors who would like this product to be there in the portfolio. Obviously, it's not a core portfolio being a thematic fund,
Sure.
but yes, it is somewhere an allocation where investors seeking something beyond the flexi cap fund in terms of a more concentrated theme should, look at this particular product. So, also to just give you a little bit of a peek into what uh, how the portfolio is going to be constructed. So we talked about top down approach. So just to get a sense of this and what are these growth themes that become relevant. So we were talking about these mega trends or macro factors creating certain themes which will be used as a funnel for the investment team to look at sectors
Hmm.
in a dynamic way in terms of how we will build up our portfolio. So for example, we believe four key macro factors that are at play in India today are creating these growth themes. Technological advancement is a macro factor leading to a growth theme, which is technology adoption across businesses and individuals in the way they live, they work, in the way this is impacting business productivity. So which is creating powerful themes in the areas of mobile, e-commerce, digitization, artificial intelligence. The second one we believe is the self-reliance initiative, which is leading to a powerful theme like the Make in India,
Yeah.
and further trickling down into sectors like, say, manufacturing, electronics, pharmaceuticals, and several other industries and sectors. So just as an example, it's basically led to the creation of a government initiative called the PLI, production linked incentive. And this is leading to entrepreneurs and businesses, both new and existing, putting in higher investments. So this is a theme which is likely to attract higher investments into the focus sectors, and hence augment revenues and profits for businesses,
Sure.
basically, which are directed toward this. Similarly, the third factor we believe is and both the third and the fourth are global factors, which is the changing demographic trends, and India seeing a younger population, a higher working population with higher disposable incomes, and soaring lifestyle aspirations, which has resulted in growth themes like urbanization, value migration, financialization of savings. And there are sectors and businesses which are likely to benefit from these. The fourth theme, or the fourth factor, sorry, is the climate change impact. And today
Yes.
we have a global population that is
Hmm.
much more conscious of and very much inclined to handing over a cleaner and more sustainable environment to our future generations. So, and most governments are also introducing regulations and allocating budgets towards, say, a renewable energy, drinking water related projects, recycling, etc. So, this is resulting in emergence of multi-year growth themes, which are likely to result in newer and augmented profit pools across a spectrum of industries, both new as well as some of these existing companies which are able to capitalize on these
Sure.
opportunities. So, just to sum it up, I think this is a fund which is based on, you said, a message for our investors and distributors. So
That's
I'm,
right.
this
That
is
would
a
have been my
fund.
next question.
Okay, sorry. Yeah, yeah. Please go ahead.
No, no,
Yes.
no. Absolutely, you're absolutely on the answer. So, what message would you like to give to the investors and distributors and advisors for your particular business cycle fund NFO?
So, you know what? We've been able to successfully create a track record over the last 16 years of existence of the AMC. And especially on the equity side, I think the long term track record is very, very satisfactory.
That's
And,
true. Yes.
investors have experienced long term wealth creation. So, the disclaimer here is that the future may not be same as what has been the past results, and mutual fund investments are subject to market risk.
Yes.
uh, but the fact remains that I think we've exhibited processes and I would say good track record in terms of running portfolios across market caps, across sectors, and I believe that this is a fund that really oh, sorry brings in all those qualities, uh,
Definitely.
and like I said, this is a fund which is placed somewhere in between a single sector fund and flexi cap, and it's meant for investors with a high risk appetite who are looking to invest in equity oriented schemes that are more diversified than a single sector fund, and for investors who are keen to have a dynamic equity exposure across a focused set of sectors or growth themes which we believe are likely to benefit from the broader trends that are emerging in the economy. So this fund is open, already open from 9th August and closed on 23rd August. And I would look at investors to analyze this, reach out to us or to their preferred mutual fund distributor, and look at investing if this fits in their portfolio.
Sure, sure, definitely. Uh, Thank you very much, Mohit, for explaining in depth about your Bank of India Business Cycle Fund. For our viewers, the NFO closes on the 23rd of August this month, and the new fund offer. So, Mohit, thank you very much for taking us through the concept, the strategy of a business cycle fund. And we at Advisor Coach wish you and Bank of India Mutual Fund the very, very best for a great NFO. And thank you so much for joining in and taking our viewers, through this Bank of India Business Cycle Fund NFO.
Yeah. Thank you so much, Suren. Thank you so much.
My pleasure. Thank you very much.